We've all seen Ray Dalio on, endless podcasts, endless, shows, having endless conversations about principles. He actually wrote a book on principles. So in this video, I'm going to break down how to design your own investing principles, give you some insight into my thinking, because I feel like when someone talks about something, you're just getting one view, and this is my take on it. So there will definitely be some crossover, but thought it'd be good to give you some insight into what I'm doing. Remember, this is according to my own research. It's based on my own experience. I do have a free newsletter if you do want to keep up to date with markets. Link to that will be in the description. Why you need principles. Ray Dalio, as I mentioned, wrote a book called Principles, and Ray Dalio has been very successful in markets. He's built a lot of wealth. He knows what he's talking about. So why do you need principles? Without principles, every decision is made from scratch and under emotional pressure, right? You need to have a checklist. You need to have a way of doing things. When this happens, I do this, and this can be applied to many areas in your life, not just investing. It could be when I get down to this weight or when I get up to this weight, I change my calories. You've got the principles there of how you're going to get to where you want to get to. And, if you've got a plan, I want to build this wealth, I want to hit this fitness goal. Having principles and having a plan built around principles makes things very easy. Most investors react to news tips, price moves and sentiment with no framework. They are constantly making decisions before FOMC meetings, before different announcements from governments, and it's not investing, it's responding to what's going on. And investing principles kind of removes all that, because if you have your principles, you just stick to them no matter what the news is saying. And principles are not rules from somebody else, so you can't be taking somebody else's principles or investing systems. You've got to create your own. You've got to have your own. And look, you can take bits from others, but I think the best people all have their own way of doing things, because you're only going to stick to something when you have true conviction in it. And usually true conviction is built by you actually doing something. And look, you don't need more information. You need better judgment. Principles are built around that, right? About having judgment and having rules and having all that stuff. You don't need to know everything. You just need to know a few things very well. So that's why you need principles. So start with what you believe in about markets. So do you believe price leads narrative? Do you believe high time frame structure matters? Do you believe leverage as a capital efficiency tool? Test your beliefs, whatever they are, against history. Are you a value investor? Do you believe when this P ratio happens, you do this decision? You've got to have your thoughts on the markets. If it's like, yes, I'm a value investor. Yes, I believe in technicals. Yes, I believe in both. Yes, I believe in all these type of things. Start with that. So, okay, cool. I'm going to build my core, my principles, my core beliefs all around that. So I've got some examples there as to what you could believe. Your thing, you could believe high time frame narrative or structure is the most important thing. Build your principles and base it all around that. Always include, probabilities. So I've got an example, starting a YouTube channel. So one thing I did, when I was thinking about starting this YouTube channel was I analysed the upside and the downside. So the downside is you waste some time and maybe some money. Some people laugh at you. That is your only downside. The upside, you build a brand, you start becoming good at content creating, you can change your career trajectory, or not even that, it just opens some more doors for you and you've just got another thing. It's like almost like an asset that you've built in a YouTube channel. So you've got to analyse things in that way. And if you view things, through the lens of probabilities, you're going to do really well. So for me, that's a really good example with the YouTube channel. Very small downside, but very big upside. And it completely outweighs it. So it makes complete sense to go ahead and plow on with creating a YouTube channel. So you've got to apply, the same thinking to every investing decision. What is the potential downside? What's the potential upside? You can add that into your principles. If I was to add more to this investment when this happens, what's the risk to reward? What's the win rate? What is it going to be? A defined stop makes your downside finite, so you can have a stop loss in place which can help manage that, or you can have it based on valuation. All this type of things. There's different ways to manage that downside, and never take a position where the downside is beyond the upside. What the upside could be. Obviously, I put there Leopold's 4x leverage recently as the time recording. That's a thing. The downside was massive. Obviously, the upside was big, but the downside was also huge. So never take a position, where the downside would really affect you and you have to liquidate positions like he had to do, unfortunately. Define what you will do and what you will not do. Define your style. How do you want to go about investing? As I mentioned earlier, only hold assets you can explain in one sentence and you can hold for a 50% drawdown. This is obviously focused more on longer term stuff. If you believe in Bitcoin, you should be holding at 60,000, even though it was at 120. If you believe in it, that's your principle. Price doesn't matter because you believe in the asset, you believe in the story. Same with gold, stocks, all these type of things. You can even do it for, I believe in America, I believe in the S&P 500. If there is a 40% correction, I'm buying. I can't have enough money. I can't have enough of it, right? So to find the condition that would, make sense for you to reduce exposure. Again, this could be, I'm going to start to sell down this stock if this happens. If inflation gets here, I'm going to do this. These are different things you've got to consider. And to find what success looks like beyond returns, you've got to be happy to follow a process and sometimes still lose money. If you're following your principles and that's what you believe in and this will work over the long run, you've got to be happy following those principles no matter what happens, right? You've got to kind of clear out the outside noise and just follow and stick to those principles. Review and update your principles regularly. You need to constantly be reviewing. Your principles at the start of your journey will be completely different after 10 years, and that's fine. The goal is to learn from your experience, update your framework. That's something that I've been doing a lot. I used to trade or do stuff on the 4-hour chart. I'm now on like the 1 day and the 1 week. I've evolved over time because of my situation and things going on. So that's what you really want to be adding in. You want to be thinking to yourself, okay, cool, I've got all these systems. I remember I had a 2-hour entry, a 4-hour, a 16-hour, a 1 day, and I was like, okay, cool, this is just too much noise. Let's just reduce it down. I went 4-hour, 1 day, 1 week, and now I'm 1 day, 1 week. So I've really reduced that down, and I've updated my principles over time. There's the data and the lived experience, and the lived experience is the best data. That's what's going to make you update your principles. So review, after significant events, wins and losses. When you're in a losing streak like I'm in at the minute, it's been pretty difficult, but you come out of it the other side much better. So, for me, summer's been pretty choppy, and I've, not been too great. And what I've been really experimenting with is trying to size up in more areas. So, and then Bitcoin, for example, this hasn't been really the area or place to size up and be more aggressive. That's something I've been doing. And now it's like, right, I need to size up where the win rate is going to be much stronger because I want sizing up to work 50% of the time, not 20 to 30% of the time, which is what I was doing before. Again, my principles have been updated through that lived experience after reviewing losses. The best time to review principles is not when the markets are moving. So you want calm periods. There never really is, calm periods, but you never want to be changing things after like a huge loss streak. You need to, maybe go on a walk, take a deep breath, and review things in good time and make those decisions based on data and when you have that clear thinking. So the verdict: start with what you believe in, write it down, and test it against history. If you have a belief, everyone does this. I believe this. Look at the data. Did that happen in the past? Because that's the only way you can, predict and look into the future is by looking and reviewing the past. That's what the best people tend to do. Always include probabilities, define realistic downside and, upside before you act. So remember, probabilistic thinking. With a YouTube channel, the downside to starting a YouTube channel or posting on Instagram, for whatever it may be, is very small. Time, money, people may laugh at you. Upside is huge. And if you think like that, it's like, okay, cool, I'm going to do it. And then you'll end up sticking with it as well for the long term, like I'm trying to on my YouTube channel in a minute. Then define what you will do and what you'll not do and review and update regularly. So remember, these are my principles, and it's like, if you know agile methodology, if you work in tech, you have like 2-week sprints, then you constantly reviewing and you just keep updating it, and then it will come out of something else. That's almost what you want your principles to be. If you want to keep up to date with my principles and what I'm doing, I do have a free newsletter. Link to that will be in the description. I'll see you in the next one.